Federal Reserve raised short-term interest rates by 0.5%, but it's the largest move since 2000. News 12's Brian Armstrong joins us live after speaking with the Chattanooga financial expert about how this is meant to slow down inflation and its economic impact. Brian.
As inflation continues to soar, the Fed says it will continue to increase interest rates. For the second time this year, that is exactly what the Fed has done, although this time it's the highest jump in interest rates in over 20 years.
The Fed has raised interest rates again this year, this time by 0.5 percentage point. This follows the Fed's decision to raise its rate by 0.25 percentage point back in March.
Things are getting more expensive. Supply chains are out of whack. That's causing inflation to be much higher than it has been in several decades, not just years, but decades. And so what the Fed does is when they raise interest rates, it makes it harder to borrow. It makes it harder for companies to grow. It starts to tighten the economy. But tightening the economy is a scary sounding thing. And so we need to understand kind of what that means for us as individuals.
Inflation has reached a 40-year high, according to the Bureau of Labor Statistics, which means the cost of living increases and salary can't keep up.
You normally get annual increases in cost of living, but we're looking at daily or monthly increases in expenses. In the absence of that being kind of a daily thing, which would be a lot worse on companies than tightening the economy, having to just basically raise rates of pay every day. You know, that would be a thing that would be very hard to keep up with, and obviously a moving target that a lot of companies' cash flow would not support.
The interest rate increase means it will be more expensive to borrow money for mortgages and car loans.
Gives that stuff permission to just increase crazy fast. Now, you look at your bank accounts, banks will happily pay you as little as they can for as long as they can. So, you now have ammunition to go to them and say, hey, the Fed increased interest rates 0.5%. I know you're getting paid more. Why aren't I making, as much as I should be in these savings accounts?
The stock market is also down today and is experiencing its worst single day since October of 2020, as the Dow has lost over 1,000 points today. So I suggest to all of our viewers and you back in the studio, Emily and Andrew, to not do what I did and look at your 401k because it's a little painful. Reporting live, Brian Armstrong, News 12 Now.